Hello and welcome. Let's just look at the markets. Markets are down about 30, 40 points. Not much that one can read into the movements into the market, but it's the mid-cap banking names that seem to be doing well. Let's go across to our first guest now. Abhishek is now joining us. Abhishek, what's your perspective as far as markets go? What do you make of the recent rally, and what does that mean for valuations of Indian markets versus ROW?
I think, first of all, thanks for having me on your show. I think next few months, we are likely to be in a situation where the markets will consolidate. We cannot rule out some sharp corrections, 5, 8, 10% corrections over the next couple of months. But somewhere, I think, close to end of September, October, we should see better, inflation numbers, etc., coming in, primarily because of base effects and things like that. And the narrative also will start changing. Already we are seeing FII inflows coming in. So all of that will start probably picking up more and more. And you will, more likely to see a much stronger market from by, Diwali time, I would assume.
Right. How do you read into the activity that is there in the month of July and August? Do you believe that it's too fast in terms of the sort of move that you have seen, or markets had overdone on the downside and that's why the reaction was also very fast?
See, I think if you look at the texture of the market over the last few years, moves have been very sharp. My guess is a lot of trading happens these days, which are system driven. So you see large sharp up moves and down moves, which was not there previously. Also, the information dissemination has also become much faster now with the social media, etc., etc. So things are moving faster, and I don't want to read too much into these short-term up moves and down moves. These are part of the market cycle. It takes its own course. Nothing much to read into that, in my opinion.
Which are the sectors that you're bullish on at this point of time? How would you trade this market from here on?
See, I've been, last few weeks, I've been meeting a lot of management, and in general, the sense that I get is most, managements are optimistic about the future. Within that, I think there is a lot of good traction in specific sectors, which are, which are coming out of the pandemic, hotels, those kinds of sectors. And in addition to that, I think there is a lot of traction that is getting built up in engineering, in manufacturing, especially the MNC manufacturing. So there's a lot of export-driven growth, especially with the China Plus One theme. And this is not going to be a short-term one. It's going to be there for a fairly reasonable amount of time, maybe a few years, maybe longer than that. So that's an area which I think is very, very interesting. In addition to that, we should be looking at, I think, realty is again picking up, even though rates have gone up, right? But if you see, rates are still approximately the same as pre-COVID levels. So, in effect, net there's been no rise in the last 2 years. So, real estate companies that feed into real estate are looking very interesting. Autos again are coming out of a fairly bad multi-year cycle, so they are looking interesting. So a lot of areas that you can look at.
Right. So a lot of areas to look into it, but within that, would you like to tell us a little more? So in auto, what would be your preference? Two-wheelers, three-wheelers, the latest EV plays. How would you essentially look at the two-wheeler pack? I mean, it's really a big sector that you're talking about.
Yeah, I mean, see, two-wheelers definitely look interesting, especially when you look at where the evolution is happening. So in the two-wheeler industry, the adoption of EVs is actually picking up very fast because obviously the price point is lower and things are moving much faster there. So individual plays like a TVS or a Hero or a Bajaj Auto definitely looks good. Or there could be feeder stocks like auto ancillaries. You could look at tire companies which are catering to the two-wheeler sectors. So across the space, there are opportunities to look at, right? Because once the cycle turns and once it picks up, you will get a lot of these companies starting to perform well and deliver results. So you need to pick out, stocks where you are comfortable and where you think the management is going to deliver on results, and start taking your bets on this.
Got the point, sir. So in terms of how things are moving as far as banking space is concerned, how would you look at it? We've now seen mid-cap banks also playing a catch-up role in valuation. How would you look at it? Would you want to stay with the larger ones, private ones, or mid-caps or NBFC? How would you look at the financial pack?
So I think, if you have a slightly longer term view, say the next 3 to 5 years, banking financials is, in my opinion, would probably perform the best. We are coming out of a cycle, credit growth is picking up. A lot of the NPA cycle is probably behind us. All my interaction with different managements in bank, NBFCs, MFIs say that, they are quite optimistic. So a lot of regulation has also now been done. So balance sheets are cleaner. If I have to personally play the banking space, I would, I don't like PSU stocks all that much personally, because I think the incentive for growth is usually missing in PSUs. So I would rather stick to private players, ones which are a little bit more conservative in their lending. So large private banks, well-capitalized NBFCs, these are the places, some of the good MFIs. So across the board, if you can, if you want to play the whole theme, the next 3 to 5 years, you can pick 1 or 2 stocks in each of these and create a basket and then play that theme.
Right. In terms of infrastructure or capital, how infrastructure or capital goods, how would you look at that sector? Any plays over there?
Infrastructure is very tricky. I mean, we've been an infrastructure deficient country for very, very long, and for some reason or the other, it's sort of always we are always trying to play catch up. But I'm more keen on the capital goods, on the engineering place, fast-moving industrial goods. So abrasives, you look at bearings, you look at gearboxes. So these are places which feed into the core infrastructure play, and you basically have a lesser risk because their balance sheets are cleaner. You have a lot of strong companies, a lot of MNCs in this where they are now getting into that export play that I was speaking about. So a lot of companies which can do extremely well over the next 3 to 5 years in this space.
Right. How would you look at the digital listing, the new listings? A lot of them are talking about profitability now. A lot of them are really talking about what's happening with the entire, space of price to sales, where investors are now questioning, how much should be the valuation should be given there. You think there are some interesting plays over there?
Not really. I mean, I would say that I've been very skeptical about all these, loss-making or barely profit-making companies, even when they were IPOing. My take is that let them perform for a couple of quarters. If you're in it for the long haul, it doesn't matter. I mean, 1 or 2 quarters, even if you get on late, you understand that the business has become profitable. You have a direction. Right now, most of them are just saying that it will become profitable and we will do so and so forth. So that in some ways a hope trade, right? You don't want to get trapped into just hope. You want to see the numbers on the ground. Profitability should be there. Unit economics should work out. So I would park them for now and come back to them maybe 2-3 quarters later and see if management has really been able to walk the talk.
Right. Just in terms of FII flows, do you think they have turned around for a while now? Do you believe that that is something which the street will focus on, that the flows or the way they were selling earlier is something which may not happen now in the near term?
Yeah, absolutely. I think again in my previous interaction with you, I mentioned that FII selling is more tactical, because if you see what has happened over the last 6 months or slightly more than that, two of their largest markets in terms of emerging markets, Russia, China, have had their own challenges and significant challenges. So as a large FII, a lot of them have been compelled to take money out because you have to take out money from where it is available, where it is profitable. So a lot of money went out of India, and ultimately, if you again stretch your time horizon a little bit, where will you get as an FII? Where will you get stable growth over the next 3 to 5 years? Your options are getting very, very limited. So I'm not only suggesting that India is going to be the only beneficiary, but India is one of the most prominent players in the EM basket, and along with South Korea, India, Vietnam, and some of these countries where the business and the economy is doing well, India is also going to be a beneficiary. So FIIs today, tomorrow, they will come back. They've already started coming back, and my guess is that you will see more and more FIIs buying picking up over the next 6 months to a year.
All right, sir. Thank you so much, sir, for taking out time for us. Always good to get perspective from you. As we look at the markets, 35, 36 points down for the Nifty, no major movement.